Hey guys, what's going on? Jeb here, and in today's video, we are going to be talking about the major crash that Bitcoin has witnessed over the last 48 hours, where we briefly dropped below $100,000. We have been predicting for Bitcoin to drop back down to $94,000 to $100,000 ever since October the 13th, when Bitcoin was trading up at approximately 114. So far, that call has been vindicated. So today, we're going to be going over a recap of what happened and why. We're going to be looking at the technical and fundamental landscape, and we're also going to be looking at where we're most likely going and what we should be doing about it. So without much further ado, let's go ahead and dive right on into it. We watched Bitcoin go through a major capitulation following the effective federal funds rate drop back here on Wednesday, October the 29th. Bitcoin saw a major capitulation following that announcement in very similar fashion to what we saw after the announcement on September the 18th that we were going to see a Fed rate cut back then as well. But the thing to keep in mind is that after Bitcoin dumped following the Fed meeting, we actually went through a major rally all the way back up to all-time high. And so it's possible that Bitcoin is about done with this drop. Perhaps Bitcoin needed to drop down to $94,000 to $100,000 to flush out the longs, as we talked about, and possibly Bitcoin has bottomed. Whether or not we think Bitcoin has bottomed is something that we'll get to in just a minute. But what we ended up seeing happen was Bitcoin dropped on the intra candlesticks down here below $100,000. And what I mean by that is that Bitcoin did not actually manage to close a single hourly candlestick below $100,000, as you can see. What happened is Bitcoin would drop down below $100,000 on the minute chart in the middle of the hour, and then coincidentally, before the hour was over, we would see Bitcoin rally back up above $100,000. This, in my opinion, screams manipulation, as if market makers wanted to drop us below $100,000 to freak out and shake out weak hands, but they didn't want Bitcoin to start closing hourly candlesticks down there because they didn't want the bearish momentum to become so great that Bitcoin ended up crashing down to $92,000 to $90,000. And so what I think happened is that you saw a very firm shakeout of a lot of weak hands. A lot of people that do not have the conviction that they need to make it in Bitcoin ended up selling. On the other hand, people like you and I, we ended up buying down here. I got entries on both of these drops below $100,000 filled. Was very excited to buy Bitcoin in the five figures again, because it is possible that we never see that happen ever again. If you look on the hourly chart, for example, what we just saw was that Bitcoin did not manage to close an hourly candlestick below $100,000. However, what we saw back here in June, when Donald Trump launched the attack on Iranian nuclear facilities, Bitcoin actually closed approximately 8 candlesticks below the $100,000 range. As you can see right here, 1, 2, 3, 4, 5, 6, 7, 8. We closed 8 hourly candlesticks in a row below $100,000. This time, we did not close a single hourly chart candlestick below 100K. So it is theoretically possible that the bottom's in the rearview mirror, although it is still far too early to make that call definitively, so we're not going to do that. We are still operating under our call that we made back over here on October the 13th, when Bitcoin was trading up here around 116,000. We said that Bitcoin would drop back down to 94 to 100,000. This is something that we posted about probably over 150 times on X, so just follow our X account at CryptoJeb to go see all those calls over there. We are still operating under that call because we don't know for sure that Bitcoin has bottomed. A quick recap on that. The reason that we said that Bitcoin would probably drop down to $94,000 to $100,000 is because Bitcoin has gone through a major rally here, and it needed to drop back down to this uptrending level of support, which represents the bull market support structure. And then on the weekly chart, we've also got the 50 moving average sitting up here at approximately 103, and it seemed like Bitcoin needed to fall back down to that level as well, which this is something that we want to mention as well. So long as Bitcoin is able to stay above the 50 weekly simple moving average, we are theoretically in bull market territory. The 50 weekly simple moving average is pretty much flat right now at 103,000. So if Bitcoin is able to hold realistically above 103,000, this little scam wick below 103 in that case would most likely be a bottom, and Bitcoin would continue on the rally higher from here. So right now, we need to watch this bottom, see if Bitcoin is able to actually move aggressively to the upside. But what would it actually look like for Bitcoin to confirm that that was the bottom? This is very obviously an ABC correction here off of the recent all-time high about a month ago, up at 126,000. Is this ABC correction over? Possibly. What we need to see is Bitcoin come back up here and reclaim the 0.618 Fibonacci level here from our correction that started up here at 116,000. That level is approximately at 110. And then we also want to see Bitcoin clear this level right here at 112. And the reason for that is because there is a great amount of, you guessed it, liquidations up there. There's a lot of liquidations going on up there If we go on over to coinglass.com, go to heat map model 2, what you're going to see is that there's an enormous amount of liquidations, short liquidations in particular, that are sitting up there at approximately 112. And generally what the market likes to do is it likes to hunt these liquidations. And I'll give you the main reason why. Market makers want to see these liquidations get triggered because that triggers a sell order, or I'm sorry, in this case, it trigger a buy order because this is a short trade. That triggers a buy order, which triggers volume, which allows exchanges to make money. And so a lot of the time, the market makers, not even necessarily the exchanges themselves, but the market makers behind the scenes, in whales, they are attempting to move the market into these zones of liquidity. That's a big part of the reason why we dropped down to 100,000 was to liquidate a ton of longs, and that's exactly what we saw happen. We saw about $1.3 billion worth of longs get liquidated yesterday, right? If you zoom in here, you'll see during the day, we saw $1.2 billion worth of longs get liquidated. And then over the course of the next 24 hours, we saw another 100 million or so. So about $1.3 billion in longs getting liquidated. And right now, Bitcoin is now eyeing this liquidation level up here at 112. So I am looking for Bitcoin to attempt a rally up to between $110,000 to $112,000 to liquidate or otherwise force close those short trades. And if we are able to breach through that zone, that's where Bitcoin would be most likely entering into a new major uptrend. But on the other hand, until Bitcoin is able to break above 110 to 112, I cannot confidently say that Bitcoin is out of the woods just yet, because just looking at the chart here, you can see this bounce off of 100 is fantastic, and it's almost completely green, but it just simply isn't large enough for me to consider this a confirmation of a bottom just yet. So what we really need to do right now is we really need to basically just sit on our hands and wait for more information and for more data to come in. And of course, we need to be in a position to be able to take advantage of the bottoms. And by the way, if you want to be able to take advantage of the bottoms, one of the best ways you can do that is you can just set a limit order. Like a lot of people got filled on limit orders down around $98,000 to $99,000 yesterday because they had an exchange set up, they had cash on the exchange, and they had the limit order in place, and maybe they've had it there for 3 months, and then Bitcoin dropped down, and we ended up seeing Bitcoin fill that. And so one of the ways you can do that is by signing up for one of the sponsors of today's video, which is none other than Femex. If you guys have not signed up for Femex, you should. And one of the reasons that you should is because you can set a limit order on Femex to catch a dip on Bitcoin. Say if Bitcoin drops more than 20% off of all-time high, which right now is about $101,000, then you can have a limit order down there. That buy order does not trigger unless the price of Bitcoin is at $101,000. I would highly encourage you guys, if you have not already, to sign up for Femex, which is a fantastic cryptocurrency trading platform who are going to take very, very good care of you. And also, the other reason you should sign up for Femex is because we are working on a trading course, and the only way to get access to that trading course is by signing up for Femex. So stay tuned. We've got a really great course that we're working on, should be coming out in the next couple of weeks. And when you sign up for Femex, you're going to be able to get that for free. So stay tuned for that. Really excited about this little miniature trading course that we're doing. Sign up for Femex. You'll get access to that when that comes out here in a couple of weeks. Anyway, what do we see on the fundamentals? Because that's really the next place that we need to go from here. Fundamentally, the reason that Bitcoin is having a major correction right now is because of a couple of factors. Number one, it's having a major correction because of the government shutdown. If you didn't already know, the United States government has been shut down for approximately, I want to say like 35 days. And the reason for this is because there's a lot of different ways you can look at it, but essentially there's a debate going on in Congress over the budget as to whether or not, illegal aliens, illegal immigrants, whatever you want to call them, let's not get too political, should be allowed to receive health care or not. And so the Republicans have basically drawn a line in the sand and say, we are not approving any budget that allows for this. And the Democrats have basically drawn a line in the sand and said, we're not approving any budget that does not allow for this. And so both sides are essentially holding the federal government hostage to get their way. I think that's the most apolitical way that I can say that, because both parties are obviously taking part in that. And so what this means is that a lot of government services are not up right now. So for example, SNAP is not up. A lot of different park services are down. There's an enormous amount of uncertainty about what's going on in the world because the government is shut down. And so this is historically a relatively bearish factor for Bitcoin. The last time that we saw a major government shutdown like this that lasted this long was right here. But the funny thing you'll notice is that right after the government shutdown ended, Bitcoin rallied. If we zoom in here, Bitcoin rallied after the government shutdown ended approximately 263% in less than 120 days. And so that's probably what we're about to see happen again, is that when the government shutdown concludes, probably sometime before the end of this month, then you're going to see Bitcoin most likely bounce. And if Bitcoin has managed to hold 50 weekly exponential moving average, 50 weekly simple moving average at that point in time, then that does paint this as looking like a local bottom. On top of that, we've also got the Cryptocurrency Clarity Act going through Congress. Many people in Congress are anticipating that that act is going to be completed by the end of the year. If that happens, this is going to be one of the biggest landmark pieces of legislation that Bitcoin has ever seen for regulatory clarity on the Bitcoin and cryptocurrency space for the cryptocurrency industry as a whole. And so that would be overall extremely bullish on Bitcoin. And then, of course, we also have the concept of quantitative tightening coming to an end. The United States Central Bank balance sheet is, for the most part, no longer dropping. QT has basically come to a conclusion. We've got another month or two of QT left, and then it's going to be wrapping up. And very soon, we're going to most likely see quantitative easing coming into play because of some of the absolutely apocalyptic kind of things going on with the Federal Reserve's repo market. I'm not going to be able to get into all that today, but right now we have very strong reason to believe that quantitative easing is going to kickstart in 2026. And when that happens, you're going to see risk on assets absolutely fly along with the stock market. And as that happens, you're probably going to see Bitcoin get caught up in the swell. So what I anticipate happens from here is that Bitcoin is going to attempt to continue this rally. We'll see where it stops out. Are we going to stop out at 0.382 at 106? Are we going to stop out at 0.5 at 108? Or are we going to be able to break through 0.618 and rally up to 112? If we can rally up past 112, that's where we start considering an all-time high breakout and run. But if Bitcoin gets stopped out here, for example, at 105.8 and falls over, or gets stopped out at 108 and falls over, that's not really a good sign, and that would indicate that we're going to drop back down to 94. So you could prepare short trades as such, and you could also prepare long limit buys for your investment account. As far as what I believe is going to happen in 2026, I still believe that Bitcoin is going to have a bull market in 2026 unless the entire overall government and stock market just begin to collapse. Mainly the stock market, not necessarily the government. I don't think that's going to happen. But what I'm saying is that if the overall economy just starts going through an absolute massive crash, that's where I would start looking for Bitcoin to go into a bear market in 2026. And then there's also the possibility that all the fear around the government shutdown, around quantitative easing, is it going to start? Is it going to not? Is it not? Are we going to see a rate cut in December? Are we not? These kind of questions could drive Bitcoin considerably below $100,000. If we were to break below $90,000, for example, there's a great deal of long liquidity down there, and that could probably send us down to 70 to 80,000. So we want to stay tuned. We want to see if 100,000 holds. If 100,000 does hold and we start breaking above 112, above 116, then that's where we're going towards all-time high, and the next rally would probably send us up towards 135,000. If Bitcoin is not able to hold $100,000, our next likely level of support is the zone between 92 to 94, which we've talked about extensively here on this channel. If that doesn't hold, then you're probably moving towards 75, and that would look like somewhat of a pseudo bear market. At this point in time, I'm still very much leaning bullish on the next 3 to 12 month timeline, and I am very encouraged about what I'm seeing in the market for the year of 2026. So I'm not particularly concerned about it whatsoever. In general, what I want to encourage you to do is to continue to dollar cost average. I want to continue to set low limit orders that if Bitcoin drops, then you get a nice solid discounted entry on Bitcoin. I want to encourage you to continue using solid money practices so you're living on less than you make. I want to encourage you to continue doing your technical analysis and continue learning about how Bitcoin and the cryptocurrency space works so that you can be profitable in this space. So if you've not already, I highly encourage you, hit that like button, subscribe to the channel, because I believe that we are bringing you the highest quality technical analysis, the highest quality fundamental analysis, and the highest quality cryptocurrency education anywhere on YouTube. And most importantly, we're using that to help you understand how the market works so that you can better prepare yourself for the future. So if you have not already, make sure to hit that like button, subscribe to the channel. I really appreciate all of you for being here. Make sure to sign up for FEMEX with the link in the description box down below so you get access to that new trading course when it comes out. I love you very much. And before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.